One. Hey, ladies and gentlemen, good morning. We have a little bit different of a flavor today. We have Retire on Dividends, big time YouTuber. I very much so recommend his YouTube channel if you are interested in learning about options trading and also learning specifically about YieldMax high dividend yield ETFs. Today, I want to talk to him in depth about both of those subjects, right? Options trading and high yield ETFs. We got him in the car. This is not the usual setup for guests on this show, but he's got an insanely busy schedule. He puts out a video every single day. He's got a lot going on. Retire on Dividends. Nice to meet you, man.
Yeah, thank you for having me, Pio. And again, for your community, I apologize for any background noise driving. I'll try to keep the profanity to a low, but there, a lot of bad drivers in the state of New Jersey, so I'll do my best.
Well, we're going to remember this one because I don't think you'll have to be making this drive forever if you keep making your content. I think you have some of the most thorough content on options that I've seen and ultra consistent. You put them out every day. So do you trade so what made you get into, I guess, dividend stocks or dividend ETFs? The reason I bring it up is I know that dividend investing is typically, it underperforms buy and hold. The reason that I bought into Misty, MSTY specifically, is because I am like a full port guy. I full port Bitcoin, MicroStrategy. I have some Solana. That's my other kind of big crypto asset that I hold a lot of. I do intend to sell that asset, whereas the Bitcoin and the MicroStrategy I'm just holding forever. And so I kind of came to a point where I realized I need to find a way to give myself more income, and buying into a fund like Misty made sense to me. But what made you get into dividend stuff specifically? I mean, you made the name of your YouTube channel Retire on Dividends. So I'd love to know how you got there, and then we can kind of dive deep into investing in dividend funds versus, buy and hold stuff.
Sure. Just want to make sure you can hear me perfect, right?
Yep.
Okay, great. Yeah, I mean, I got into investing probably about 6-7 years ago, and I got it. The reason I never got into investing, I always thought it was too expensive. I'm like, all right, if I can't even afford the commission to make a trade, I'm not even going to bother, right? And then Robinhood came out, and then essentially I got, once I heard about dividends, I'm like, wait, if you buy something, they'll pay you money, to hold it. And then, right after I kind of started learning about that is when I started my YouTube channel at the same time, because the thought was, all right, let me make a channel where I could kind of talk about things and teach people as I learn it. My channel name in the beginning, by the way, was called The Broke Investor. I ended up changing the name, which was a great decision by me. But anyway, dividend strategy was always my strategy, and the thought was I'm just going to keep buying, the dividend growth stocks, and I'll buy them until I'm of retirement age, and that way I'll have my 401k, and then I'll have my dividend account, and then I'll essentially just it'll be enough. But then something changed. YieldMax came out, right? Started with Tesla, OARC, etc., and it kind of changed the game. And I did know about options before they came out, but I kind of dabbled and I lost a lot of money and I took a break. And then I got into crypto, which we could talk about. But once they came out, I kind of like lit a fire under my what, and it made me realize that, all right, I can actually, utilize this income now, right? I should start investing in not a retirement account, a taxable brokerage, so that I could shoot to retire earlier, than the typical 59 and a half, 62, 65. So once those funds came out, I basically researched the hell out of them, added them to my YouTube content, which helped my YouTube blow up, to be honest. And I've been covering them since, to this day. It's been almost 2 years at this point. And I'm still investing in them. But yes, I am trading options on the, I'm trying to do more options myself, but, it's really hard, obviously, with a full-time job and everything. But I am doing both high yield funds and options trading at the same time.
Okay. And so thanks for the detail. And ladies and gentlemen in the audience, Ray, I didn't want to ask Ray to be here at 6:30 in the morning, so forgive me. I cannot share screen while I'm actually talking to somebody. So Ray's not here, so there's going to be limited on-screen visuals, but I want to show some on-screen visuals. I'm still going to try. But okay, so totally understand. YieldMax came out and you got interested in that. So for people that don't know YieldMax, there are different funds. There's one called Misty. That's the one I buy. That's for MicroStrategy. There's one called NVIDIA. That's for NVIDIA. There's one called Tesla for Tesla. There's an Amazon one too, right?
Yeah, there's a whole bunch of them. Maybe up to 40 now. But yeah, the popular ones are Misty, NVIDIA, Coney, and Tesla. Those are the big four.
And the idea is that 20% of the fund or something like that is the underlying asset. So you still have exposure to Tesla, MicroStrategy, NVIDIA, etc. However, the rest is in treasuries and then options that they're trading on the stock designed to generate you yield. Am I right about that?
Yeah, well, they have full exposure to the asset via a synthetic position where they buy a call and sell a put. That pretty much mimics the movement of the underlying. And the reason they do that is basically so, they can invest in treasuries with hopefully the majority of their money with a high interest rate environment. That helps, right? And it's just another way to bring in additional money. And then they'll sell calls on that synthetic position on a weekly basis.
That makes sense. Okay. And so, and by the way, ladies and gentlemen, I just realized I have the wrong background too. Look, it's early, but we're just going to keep rocking. We're going to keep doing it. And so, Rod, I'll call you Rod for the show, Retire on Dividends, Rod. When you think about which of those four is your favorite? Obviously, MicroStrategy is probably the most volatile out of the four, although Tesla's volatile as hell too. I don't know if you would consider Tesla to be more volatile than MicroStrategy. I borderline might. But when you think about NVIDIA, Tesla, Misty, what do you think is the most interesting out of the four, or any of the funds?
It's Misty, and it's not even close anymore. Like Misty, NVIDIA has been the GOAT. I've been calling NVIDIA the GOAT from pretty much the beginning, but Misty has taken the throne, and it's an amazing fund because their implied volatility consistently stays around 70 to anywhere, up to 200% sometimes, right? And the higher the implied volatility, the more premium they could generate. The more premium they could generate, the more income that they could pay people. And I don't know if you were in Misty in the beginning, but for launch, they had some pretty good dividends or distributions, coming out like up to $4 per month. I know it's kind of slowed down. Crypto's on mellowing out a little, and it's still doing well, right? It's still, the fund had launched at $20. It's still at $20, and it's paid out about like $33 from inception. So it's the best fund that they have for sure, and it's the biggest fund that they have. It's about 2.2 billion in assets right now. So
makes sense. And so for people that are unfamiliar with funds like this, you just pointed out that the fund came out at $20. It's still at $20. It's been out for a little bit over a year, I believe. Like its birthday was relatively recently. And so let's say you bought 1,000 shares of this thing at $20. So 1,000 shares times $20, that's going to be 20 grand. Well, they paid out $33 per share. You just pointed out, over the course of this past year. So that means that you would have put in $20,000. You would have been paid out $33,000 total, and that's over 12 months, and that's every single month, right? So it's every 4 weeks, 13 payments per year. So you would have, for holding $20,000 worth of this fund, you would have been paid out $33,000. So you'd be, totally in the money there, and it'd still be worth $20,000. Am I right about that?
Exactly. Yeah. So even if without DRIP, without dividend reinvestment, if you were just spending the cash like a lunatic, you'd still have your $20,000, right? And you'd have all this money to play around with. Not all the funds, though, are like that, right? Some of the funds, they perform poorly, which, Tesla, in my opinion, Tesla's a big fund. It's a popular fund. And I'm not a fan of Tesla because I always say Tesla has unappreciated IV, which means, their implied volatility, it doesn't reflect the actual movement in the underlying. Like Tesla can jump up like at a, like not like crazy out of nowhere. It'll jump, it'll dip out of nowhere. And the problem is with the YieldMax funds, they have a prospectus, which is basically the filing with the written document that they have to go by, they have to trade by, and they have to stick to it, which means, they try to yield what the underlying IV is. And so sometimes when they trade Tesla, they go too close. They sell calls too close out of the money. And when that happens and Tesla goes to the moon, they're losing out on that upside and it hurts them. But the good thing about Misty and the high implied volatility is they're able to sell calls much further out of the money, which again, I don't know if your audience knows these terms. I'm hoping they do. But since they're able to sell further out of the money, they can capture a lot of that MSTR upside, because we know there's a lot of MSTR upside. Not lately, but over the past year or
Not
so.
Yeah, not lately. And sure. Why don't we give them like a very quick crash course in some of these options terms? And then I didn't know that your channel was originally called The Broke Investor. I do think that there's some people in our audience that are younger, some people that are just getting started out, people that come from crypto, maybe coming from Solana, and don't have a huge bankroll, right? Because when you get into options trading, to do it safely, a lot of times you need to have tens of thousands of dollars. Like if you want to sell puts or calls on Tesla, for example, or on MicroStrategy, you need to have like $25,000, sometimes closer to $30,000 of potential exposure to the asset. Not everybody can snap their fingers and, accommodate that in their lives. So I'd love to get to, a little bit of a discussion of what you would do if you were, say, working with a smaller bankroll, like a $5,000 or less, $5,000 or less as your bankroll. But yeah, why don't we do like a quick crash course when you talk about, selling or like options out of the money, anything like that? Why don't you kind of give a super simple explanation for the audience? I think they'd appreciate it.
Sure. So yeah, I mean, to your point of the bankroll, the problem, like when you think of an options contracts, everything is 100 shares, right?
Yep.
So think of, the price of the stock times 100, and
Yep.
that's one contract. So it could be very expensive, right? So when you're just trying to learn and you don't have a lot of money, unfortunately, you're kind of stuck learning. I'm not going to say penny stocks, but the bottom of the barrel, right? And
Yeah.
that could put you, in a predicament. Like, for example, when I started options trading, I was the broke investor, right? I was broke as hell. I didn't have money to invest. What did I do? Traded AMC.
Sorry, you broke
AMC,
up. Oh,
high
AMC.
implied volatility.
Okay,
Oh,
AMC. Got
AMC, yeah. Yeah, so, hands, I don't know if any of you, if you guys know that whole thing, but they, was in the midst of the whole thing, and their implied volatility was through the roof. Like their implied volatility and GameStop's is not even comparable. Like it's crazy, but at the same time, it's very high risk. I, so do not do. Look for something that you can afford, or there's always. I know a lot of people, they recommend paper trading. My opinion is, if it's not real money, I don't care, right? I'm not going to play with fake money, right? It's like playing fantasy football with no money. I'm not doing that either, right? So I don't know. Everyone's different. But anyway, what I do with options, I do what's called like the wheel strategy. And it's more so an income strategy. And there's many different strategies with options, but I'll just speak to mine. And it's on the sell side. So I sell puts and I sell calls. So the beginning of the wheel, let's take a a $5 stock, for example. Let's say you find a stock that's $5 and you think it's maybe undervalued. So you're willing to sell a put for $5, which is called at the money at the time, right? And what you have to do is put up collateral for, for that put. And again, one contract, 100 shares. So 100 times 5, $500. So you need to have $500 in your account for cash on hold for that put. So as soon as you sell that put, your brokerage is going to put that under cash on hold, so you can't touch that money. And you'll sell a put, you'll choose a strike price, which will be the $5, and then you'll choose an expiration date, say 1 week, 2 weeks out. So by the time you get to the expiration date, if that underlying stock drops to under $5, you'll be assigned those shares for a price of $5 per share. If it goes above the $5, then you will not be assigned and you'll get your money back. But again, the way I do it is I don't care about either result. When I sell the put, I'm okay with assignment and I'm okay with getting my money back, right? So as soon as you come up, you have that mentality, it just makes things a little easier. And again, I
Yeah.
don't know if everyone understood that part, but real quick, I'll get into the call side. I don't want to put anyone to sleep, but once you get assigned those 100 shares for $5, you can then sell calls on it. So you own the 100 shares, you can sell calls, say at the $5 strike or above, which means you're basically agreeing to selling your shares at $5 by this expiration date as well. And the reason you're doing all this, by the way, is you're getting paid a premium for each time you're doing that. And it's really hard to shorten the explanation of options, but that's basically it in a nutshell. And there's a lot. I know. I don't know. I'll pause there. And
No, look, that was a really good, simple explanation. And I'll just recap it because I feel like when you get into the TradFi stuff, you get into the option stuff, it's like, it's a lot to understand, but I want to give our audience a basic understanding so that we can have more involved conversations with specific assets. Because I actually have questions for you. I've gotten into options trading basically at the same time of watching your channel. The way I found out about your channel is I was a huge Bitcoin and MicroStrategy guy. And then I found out about Misty and I was like, this is interesting. And this guy, Peter Dwan, who was the first guest I had on this version of this podcast, told me that, I think he might've said it on the podcast. He might've said it publicly in front of everybody, that a great YouTube channel to watch was this guy, Retire on Dividends. He goes really deep on all of these funds. And obviously you have to have a sophisticated understanding of options trading to do that. So real quick, I actually also have a lot of interest in the wheel strategy as a cash generating strategy for myself because I'm full ported again. So I don't believe that my wheel strategy is going to outperform me just plowing every dollar I have into Bitcoin and MicroStrategy and just holding. But as a human that functions in the world, I do need to have cash also, and I have some bankroll that I can play with to generate cash. Obviously, I have a job like running our business and getting a paycheck or whatever. But the point is, I'm so aggressively full ported that my diversification is like, let's generate some cash. Let's have some cash income, right? And so the wheel specifically, I'm glad that you brought up the wheel. That's the strategy that I want to implement myself. So real quick, you just said that with the wheel, what you do is you sell an at the money put on a stock. I think the one thing you didn't mention that is an asterisk, and correct me if I'm wrong, is you have to be comfortable holding the stock if it goes down in price. So you don't want to do it with any old stock. You want to do it with a stock that you're at least quasi interested in. Is that fair to say?
yeah, I mean, that's the most important part, honestly, especially if you're doing the wheel. It's got to be on a stock or an ETF that you're okay with owning. Because if you're not okay with owning it, then you're just gonna kill yourself and you're gonna ruin the whole strategy. You're gonna sell for a loss, right? If things go south, you have to be okay with holding that stock. So again, like say like for that $5 example, again, I'm not saying buy a $5 stock, but if it goes down to say $3, you need to be okay with that, right? You need to be okay. If you get assigned at, say it's at $3, you got to sign your cost basis is $5 per share. You're in a bad spot, right?
Yeah.
But again, the strategy that I teach with the wheel, all right, just say you had like 2,000 bucks. All right, I got another what, 200 bucks. I could sell a put at, $2 or $3, right? So I'll put up another 200 or $300. And guess what? If it gets assigned, great, because it'll lower my cost basis. and then I could sell calls, you know, either at that cost basis or above. But again, with the current market conditions, there's, you know, different ways to handle this. Obviously, we're in a, you know, my options. I'm assigned on a lot lately, and I'm selling calls left and right. But you know, and again, I don't want to go too deep into it. I make a video every Saturday if anyone is interested in options, by the way, on exactly the wheel strategy and what I'm doing with it. But but yeah, to your point, you have to be okay with the underlying. Don't trade it if not, right? And make sure like some of these, like, even if you like the underlying, but the implied volatility is like nothing, it might not even be worth it, right? Because the premium's not there. So you have to have the right, you know, the right percentage of implied volatility to give you the right premium, and you have to have the love for the underlying or the ETF, you know, for the that you're trading on.
So two assets that fulfill those things for me are Tesla and MicroStrategy. But what's the catch? The catch is that their share prices are over 200 bucks, between 200 and 300 bucks. So when you multiply those share prices by 100, you know, you're in the whole 20 to 30K if you want to start playing the wheel strategy with those assets, which is fine for a lot of people. But I know not everybody's going to be ready to just roll out a 30K strategy that they could potentially lose money on when they're a beginner with options. One asset that I thought was interesting is Robinhood stock, because it's actually got decent premium. I guess it's like pretty volatile. I haven't paid a lot of attention to the stock. I used to work at Robinhood. It's gone up a lot. It's gone from $8 about 5 years ago to $42. I think the all-time high was maybe closer to 60. What do you think of running a strategy like the wheel on Robinhood stock?
To be honest, YieldMax has had a Robinhood ETF pending for a while, and I've been rooting for it to come out because they have very good implied volatility, and I'm guessing they have high implied volatility because it's a stock that's shorted a lot. So now, I personally, you know, I probably won't trade it because I'm becoming more and more comfortable with trading index ETFs, triple leverage index ETFs, because, you know, I am still a degenerate at heart. So I'm trading 3x S&P funds, 3x Russell, you know, things like that. I also trade 2x Tesla. So to your point of not affording Tesla, you know, there's double leverage Tesla funds that are available. One that I trade is TSLL. I think it's down to what, $8 lately. Very affordable. One contract, 800 bucks, right? But it's double the leverage of Tesla. So you have to be okay with the movements of Tesla. But to answer your question, Robinhood, I personally wouldn't do it, but the IV probably makes it very appealing for sure.
So I'm looking at TSLL right now, and the thing is, because I've tried to actually trade options on Misty, and I've tried to trade options on MSTX. These 2x levered funds, don't they have like a ton of decay? I mean, you're kind of playing with fire with this, and the options premiums right here aren't that strong. And if you're just listening, ladies and gentlemen, I figured out how to share my screen, and I have Robinhood pulled up. So I'm kind of looking at yesterday's close options premiums. Obviously, it's earlier than 7 a.m. Eastern here. So until 9:30 a.m., we won't have live options premiums on any of this, because keep in mind, this is traditional finance. So it's between 9:30 a.m. and 4 p.m. Eastern that we can actually have the real premiums. But you're trading options on TSLL?
Yes.
Wow.
I love it. Yeah, man. It's awesome, man. The IV is over 100%. And of course, yeah, you got to take the good with the bad. And I can tell you right now, my current position, I'm underwater, right? My cost basis is $17, and I have 900 shares
Damn.
right now at $17. So what I'm doing though is, my original thought was I'm never going to sell calls under my cost basis. I have since changed that mentality and accepted I'm going to earn income no matter what the market does. So if it's a bear market, you know, if we're down this much, what I'm going to do is I'm going to sell calls, but I'm going to sell calls a little further out of the money. And I hate speaking Greek terms, but They say, under 20 delta is a less risky position. So if you sell calls with under 20 delta, you're, less likely to get assigned. So if I'm selling calls for a strike price that's under my cost basis, I do not want to get assigned. So again, I'm not going to hold those 900 shares and have them do nothing. I'm still going to have them earn money for me as Tesla hopefully, recovers or not. Again, I'm here for the journey, whether we keep going down or whether we recover or stay flat. So again, it's just a different mentality, and you have to be okay with that risk, right? So if Tesla flies to the moon and my calls get blown through, I'll roll them. I'll roll them up and out, and then I'll keep rolling them up and out as long as I can, so that I don't lose any capital in the long run.
Yeah, and the reason that you're saying that you don't want to be selling calls below your cost basis is because if the shares were called, like you pointed out, like let's say Tesla rips, the TSLL fund rips, and your shares get called, you actually lost money. You didn't profit because your cost basis is higher than the number, the share price the strike price that you got
Exactly.
called. Yeah. Okay. So so why is it that you wouldn't touch Robinhood? I'm curious because I'm pretty interested in trading this, and when I look at the premiums, they're very interesting. I have them pulled up right here. Selling an at the money put at close yesterday. The share price is $42.22. So if I did 42 strike, I'd get $159 a premium. And then if I got assigned, sorry, that's a call. So if I did, I get $153 a premium if I sold a put at 42 bucks. Let's say I got assigned on that and I turned around and sold a call at 42.50, I'd get 136 bucks. Given share price and how much of an investment this would require, I kind of feel like Robinhood is pretty interesting to me. What is it about Robinhood that has you thinking no shot, no way?
Again, it comes down to it's an individual underlying. It's an individual company. So now I have that risk, right?
Yeah.
So you have to worry about, that just Robinhood itself, the company. You have to understand, how are they doing? Are they actually doing well? How are their financials? How are their earnings? Who's shorting them? Why are they shorting them? Are they doing anything illegal? Are their auditors going to leave them like SMCI? Again, you have all of that worry now when you're trading options on them. And that's why, again, although yes, I do trade TSLL, which the underlying is Tesla, but I've gotten so comfortable trading Tesla lately that I'm not as concerned with Tesla. But for the most part, that's why I like trading, again, triple leverage index. If you just trade the index, the premium's not there. But they all, that's why I'm trying to stay with more so index related funds, because I don't want to have to worry about earnings calls, right? I don't want to have to worry about that. I just want to have to worry about watching the movement, of the chart of the index, right? And that's it. So you get comfortable with it. But now, if you invest in Robinhood, you have to worry about Robinhood. How are they doing, right? And Robinhood's a great company. I love Robinhood because I always say they are the reason I got into investing. And if it wasn't for them, I'd probably, who knows, right? Because they came out commission free. Boom, they changed the freaking game. So all props to them for doing that. And for that reason alone, yeah, I'd love to believe in and trade for Robinhood. I'm not saying it's a bad idea. I'm just saying that's why I don't do it.
Fair. Okay. I mean, talking about triple X levered ETFs is some degen stuff. So I didn't expect that to be the kind of baseline response. But I mean, I think actually a lot of people in our audience would think that that's like a pretty compelling, potential strategy. I think I'm more of a traditional like buy and hold kind of guy. So the idea of having to pay attention to the single stock of Robinhood is sort of easier for me to process than doing the triple X levered, approach. So I guess if we shift gears here, you said that you got into crypto. I asked you if you were like a Bitcoin guy. It sounded like maybe you weren't. I'd love to know, how you think about Bitcoin, crypto, and if you're, stacking Bitcoin and crypto at all.
Yeah, so I got into crypto, again, probably the same time I got into investing, right? 5, 6 years ago. And it was through Coinbase at the time. And I was buying it. I didn't know what the hell I was doing. I was just buying it. I think it was $5,000 at the time, I think. I'm not sure. But then the problem I screwed up is I got involved, and I have my friend to blame for this. Some stupid crypto mining project, right? And I invested my Bitcoin with them, and they're going to pay me more Bitcoin, right? No, they take all your money and it's gone. So,
Yeah.
and it was like an overseas scam, and everyone got ripped off. And yeah, it's and that kind of just like honestly just killed it for me. And it wasn't Bitcoin's fault. It was just, I don't know, it just gave me such a bad taste in my mouth. But years later, I did get involved with crypto, not Bitcoin, but shitcoins. I don't know if you, I'm sure you guys know the term shitcoin.
We do.
But basically, okay, yeah. So I got into, you know, the Binance BNB various tokens. I got involved with you know, startup projects, you know, signing up to be a moderator with different startups. I got rug pulled a couple times, of course, but you know, I found a couple good funds. I made some money, and then again, options. I got back into options, and I was like, I don't have the time for both. So that's why I'm kind of just not. I'm not really in the crypto world. I kind of got back in once I got on the MSTR train. And I agree with you. It's really just Bitcoin, honestly. And then there's everyone else, right? Everyone's just playing, you know, catch up. But yeah, I need to start putting more money in crypto. And I think you saw my post on Robin. I'm getting there. I'm working. I'm getting back into it.
Yeah, and so real quick, actually, I'm gonna show your Twitter handle on the screen right now, because I think, you know, you're getting more into Twitter, and I think you're a great follow for people that are looking to, like, again, learn about other things. So I'm just gonna do this real quick. There we go. And okay, cool. That's Retire on Dividends Rod's you know, Twitter handle right there, ladies and gentlemen. I have it on the bottom of the screen. Retire on Dividend. Give him a follow, because he's going to be posting some of his live options trades, it sounds like, and you know, just general strategy. But anyway, so my thought is, you don't need to worry about, quote, crypto. You could just have your baseline while you're doing your options trading and while you're doing all your normal, you know, TradFi stuff, and just have the baseline be Bitcoin. It doesn't have to be 100% Bitcoin. You don't have to be full Michael Saylor and just, you know, full port everything into Bitcoin, but just have a Bitcoin stack that you're gradually building. That's a percentage of your net worth that you're not planning to sell. So you never feel like oh, I should have sold, or like, oh, did I sell too early, or like all that stuff, because it doesn't matter, because you're not going to sell it. And it's just going to grow and grow and grow over time. And then all of a sudden, one day you're going to wake up and you're going to be like, holy shit, that Bitcoin stack's like 1.5 million bucks. Thank God I did that. If I didn't do that, I would have screwed myself. That's my thought. If you're really crafty and you're really good at trading options on 3x levered ETFs, then like having the Bitcoin baseline is going to act as like a supercharger to what you're doing. Is there going to be volatility? Of course, but it's Bitcoin. You're not giving it to some Bitcoin mining scam. You're not worried about shitcoins competing with each other. You're not worried about a foundation debasing the shitcoin to make a commercial that everybody hates. There's all these different things that come into play when it comes to crypto, but you're not getting that with Bitcoin. So I just feel like that would be something that could supercharge your options trading.
Yeah. The only thing I hate about just like owning Bitcoin, and this goes with you know, growth stocks, is it doesn't pay me income, right? And I always want any asset that I own, I want to pay me income, and you know, or else what's the point, right? And I understand it's growth. It's basically growth, and it's worth it, right? It's the best growth you're really gonna get and see. But that's always been my whole. I wanted most of my money, if not all of my money, to produce me income, and that's, you know, that was part of the hesitation with Bitcoin too.
Well, what if I told you that?
Can I ask you a question about Bitcoin?
Yeah, but real quick, let me just say, in the future, you'll be able to earn yield on Bitcoin. It's just still objectively too early to have a
Yeah.
safe and sound way. But having on-chain Bitcoin like in 15 years is probably just going to be insane, where you can get yield on it like crazy. The other thing is that if you really want yield now, you could just do MSTR and have the same approach and just accept the volatility. But anyway, what was the question you were going to ask me?
That's kind of the question in general. Like, where would you prefer owning Bitcoin? Or are you okay with owning Bitcoin through MSTR only? Like, is that something you would recommend?
So I'm a huge MSTR guy, and like a huge MSTR guy, huge Michael Saylor guy. But the thing that I like to make sure people understand is that MSTR is not Bitcoin. Like everyone's like, it's MSTR or Bitcoin. Why would you own MSTR versus Bitcoin? My position is it's not Bitcoin. It's a publicly traded company that's implementing an ultra modern corporate finance strategy to leverage three techniques and counting to acquire as much Bitcoin as possible. And then in the future, use that Bitcoin in a Citadel-esque way to generate, new lines of business and trade at a multiple forever. So MSTR is an investment. There's way more risk with MSTR. In theory, things could go poorly with MSTR somehow. It's not foolproof. There's key man risk with MSTR. All these things come with MSTR. It's in TradFi. It's not a token that you actually own and self-custody yourself. So those are the issues with MSTR. Having said that, do I think that MSTR is going to outperform Bitcoin over the long term? Yes, I do. I think it's the only asset that will outperform Bitcoin. No altcoin will outperform Bitcoin. No stock will outperform a Bitcoin besides MSTR. Only MSTR will outperform Bitcoin because their strategy is based around owning more Bitcoin than anybody else and leveraging that Bitcoin. Oh, we lost. Oh, no, we lost him. Oh, man. Ladies and gentlemen, he was in the car. I was literally in the throes. I was in the throes of talking about Bitcoin and we lost him. That's absolutely devastating. That was like the Super Bowl part for me, is trying to orange pill retire on dividends into a Bitcoiner or an MSTR whale. That's a tough one right there to have hit while, we're in the throes of the show. Look, we'll see if he comes back. If he doesn't, make sure you give him a follow on Twitter. I think he's a guy that deserves to be able to focus on content full time, because if you listen to his YouTube content, it's really, really thorough, and you can learn a lot about options trading and you can learn a lot about these YieldMax dividend stocks. I'm not sold on having like your whole I'm not sold on having your entire net worth in dividend stocks, right? Because dividend stocks don't outperform the underlying, and they also don't outperform buying and holding a hard asset like Bitcoin. We got him back. Rod, what's going on?
Sorry, man. My phone overheated and it shut off.
All good. So where did I cut off? I was talking about Bitcoin and MicroStrategy.
Yeah. So, yeah, you're saying, Bitcoin. Last thing I heard, Bitcoin, MicroStrategy is not Bitcoin. Obviously, that they're its own thing, which I agree. And whenever I hear you ever hear Michael Saylor just talk about Bitcoin and MSTR, and just like,
I've heard it all.
I don't know, you just fall in love. It's like, I want more,
Yeah, man. Look, let's put it this way. So if I sold my Bitcoin at the top of last cycle and blah, 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 I'm pretty convinced that I'd have less Bitcoin now, because it's kind of how it works. It's like hard to properly get back in if you're getting in and getting out. I think it's easier to just hold and stomach the volatility and get excited about when the price goes down, because you can buy more. Because it's like, if you sell something, then that means you're giving it away. There's less of it. And if I had sold Bitcoin and I didn't have as much Bitcoin as I have now, I'd be way less financially secure. Like, I look at my Bitcoin stack and I'm like, holy shit, like, thank God I have this. And like, What if I had to build this stack from scratch now? I don't make
Yeah.
$700,000 a year. I'm not like a plastic surgeon or something, right? I mean, we have a good business and we want our business to pop off so that we can make more money. But like, we run an honest business in many ways right now, an advertising business of sorts. We want to get that $100 million crypto upside, but it's hard. It's insanely difficult, right? Anyone will tell you it's insanely difficult. Even if you're like a tech genius, it's insanely difficult. One thing I wanted to point it out is we got someone from X, ebiao.base.eth. He said, one thing that I said that he disagrees with is that nothing is going to outperform Bitcoin. He said things have happened. I'm talking about over a long time horizon. Solana outperformed Bitcoin for like a 6-month period. Things can NVIDIA outperform Bitcoin for like 5 years, which is actually the most insane outperformance, in my opinion, for an individual company to outperform the Bitcoin network for an extended period of like 5 years. People don't talk about it enough. That run from NVIDIA is actually insane because you're just talking about one dude's company, like Jensen Huang's company that he started himself and built from the ground up over like 30, 35 years, outperforming the literal most robust technology network in the world, proof of work architecture. It's insane that it outperforms. It's not going to outperform it for another 10 years. It's impossible. And now Bitcoin's been kicking NVIDIA's ass. It's not, listen to Sailor. Sailor says it's not even funny anymore. It's a joke. MSTR is just kicking NVIDIA's ass and Bitcoin's kicking NVIDIA's ass because that's how it works. And ETH outperformed ETH outperformed Bitcoin for, I think, 2 cycles. But now look at what happened with the ETH BTC chart. The reason being is, these altcoins are more like startups in many ways. They're still networks, so they're better than startups because they're open networks that people can build on. But they end up getting disrupted by each other. Solana disrupted ETH. There's competition. So I know now I'm going off and you're a guest on the show and I'm just having you listen to me. But yeah, that's my thought on the Bitcoin versus crypto stuff.
No, it's good. Crypto, can't be ignored, for sure. And I think, I have Misty to thank, well, for reminding me of crypto and bringing in viewers like you, right? That probably wouldn't have cared about maybe the other funds as much. But, MSTR, Misty, they're unbelievable funds. And again, if a lot of people, when you talk about, the YieldMax funds, I don't know, there's a lot of hate. I'm sure you may or may not hear it. But there's always argument that, they always compare it to the underlying, right? So to compare Misty, I'm sorry?
I said, which I get. I understand why people are saying that it's better to own MicroStrategy than Misty because MicroStrategy is going to outperform Misty, but Misty's just a different thing for a different purpose, like we pointed out.
Exactly. Misty's for income. If you don't need the income now or don't want the income, then don't buy Misty, right? If you're buying and holding, sure, it's MSTR and it's not even close, right? Because Misty, yes, you're getting income now, but if you don't need it, you're capping your upside for no reason then, right? Obviously it can work out where it actually can beat the underlying, but it's hard to do on a long period of time. Like in a short period, it's possible. And a lot of these funds have beaten their underlying in a shorter period. But when we're talking long term, yeah, the underlying's, typically just going to beat out these ETFs.
Yeah, and it seems like you just got to work. And to just put like a bow on what you were just talking about. Look, if you're a doctor or you like work in tech sales and you make $500,000 a year and you got income, out the wazoo, you don't need any more income. Maybe Misty's not really the thing for you. But if you're someone that's trying to give yourself a little bit of a raise, so to speak, what I will say is it's a pretty high risk way to do that. But according to you, Misty's the king of the YieldMax ETFs. I have Misty. I got a $1,753 dividend over the past 30 days. That was my dividend for holding Misty, right? And so I like that. That works for me. I do think that perhaps my wheel options trading would actually outperform this, but I'm pretty comfortable having like 28K or something like that in Misty because I also know that when MicroStrategy absolutely rips its face off, I would not be surprised if Misty goes back to like $40, which it's been that high before. And then this dividend is going to be pretty insane. I'm going to feel pretty rich getting like a $4,000 a month dividend during that period.
Yeah, and one thing to understand with these funds like Misty, it's an option. The whole thing is an option, right? Which means, guess what? It has an expiration. So if Misty goes up to 40, like you say, right? That's double. That's $20 in income. And they have to pay out legally 90% of what they produce in income. So it's going to go back down via payment, though, right? So people always have to keep that in mind. You know, all these funds, the famous word is NAV erosion. I never use that word, because again, to me, it just mimics the movement of the underlying. But again, like even a fund like Misty, even if if MSTR just keeps going up, Misty will always just be at 20, right? Or around there because they have to pay out their income. So, in the end, it lands where it launched, right? But that's fine as long as you want income. I want income now. I actually use Misty income to pay my mortgage, right? It's paying my mortgage. I have other incomes of paying all of my other bills. So I basically have my brokerage paying all of my bills outside of like property taxes. And it's all automated. That way I could focus, on my actual work income on, the other expenses. But it's I love it, man. It's a good time.
Absolutely. Well, you heard it here, ladies and gentlemen, using the dividends to actually pay for a mortgage, pay for living expenses. I think a lot of people are interested in that. There is risk involved. Obviously, it's not like a get rich quick scheme, but if you pay attention to it, and obviously retire on dividends, Rod here absolutely does. Here's the channel. I listen every day. I want to get my Misty update. I want to understand what's going right and what's going wrong in the Misty fund because they're doing some pretty sophisticated stuff. And obviously it's they're managing a lot of capital. This is the YouTube channel. It's if you just put in retire on dividends on YouTube, I really recommend it. I started listening like 6 weeks ago, and it's what kind of got me initially into options trading and learning more about options trading. Now options trading is something I'm focusing on because you can do it in any market. A lot of the crypto guys are saying like, oh, the market's so boring right now, there's no trades. Yeah, there's no trade if you're trying to open up Photon or Bullx and press a button and buy something, and then 30 minutes later press another button to sell it and just try to get rich that way on some random ass shitcoin that's literally going to go to zero. But if you learn options trading, you can do it whether the market's going up or going down on quality assets. So yeah, give Retire on Dividends a listen, give him a follow, give him a subscribe, so that he actually thinks it was worth it to come on this show too. Show him that we're a strong audience, but thanks for coming on, my man.
No, it was I found out when you reached out to me. I watched your show. Your show's good. I do like your show. I like the environment, so I'm more than happy to come on again. Even if it's on a normal time, that way it could be with everyone. I'm happy to do that as well if you want me back. But yeah, to your point on options, if to your investing community, again, don't be intimidated. I highly recommend at least trying to learn options because how I talk now is I'm not buying stocks. I get paid to buy stocks. And I'm not selling stocks. I get paid to sell stocks. And that's how we should use the market. Everyone else does, right? All the rich folk out there, right? That's what they're doing, and again, options, it's just such a powerful tool. And once you learn it, you definitely see a different side of the stock market and you could use things to your advantage. Whether you learn it while you're still at work, when you retire, it doesn't matter, but the sooner the better. And don't be intimidated. Again, that was the point of my channel. I want to speak to the everyday person. I like to think I speak the normal language. I'm not using any of these, these big words. I'm not pretending like I know everything because I don't, right? I know Jack just like the rest of us, right? We're all learning together and we're all here, to help each other. And again, that's why I really made the channel. And again, I appreciate your time. I love your channel. I'm gonna be watching it every day. Probably be in the chat, busting your balls. But it's I hope to be back. And thank you for watching my channel. Like you said, I appreciate it.
We'll do it again, dude. And I love the way that you kind of put it is like, even if you just think about it like this, getting paid to get in and out of positions is a really good way to think about it, because it's like, if I'm going to go buy $5,000 worth of Robinhood, well, it's better for me to just sell an at the money put and get paid to get into that $5,000 position, right? Versus just buying outright. And that, like you said, that's how the big guys are doing it anyway. So check out his channel, give him a follow on Twitter too. I told him he's got to pop off on Twitter. That's the platform that he can crush, but obviously the YouTube is sick. And yeah, thanks for coming, man. We'll do this again. We'll do it on the main show. Thanks for listening, everyone. Catch you guys later. See ya.